Tyler Laundon, the Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, here with your Cabot Weekly Review. It is January 17th, Friday, and we are coming up on about 11:35, 11:40 here. So as you can see, chart of the S&P 500 here. You know, we ended last week, the market was looking kind of iffy, and then things got better this week when better than feared inflation data came out on Tuesday. Of course, that was the PPI, and then Wednesday, the CPI. That helped to get a little bit of reprieve on the yield curve. So treasuries, prices got a boost. They knocked the 10-year yield down from last week's level of about 4.8%. We'll go to the 10-year chart here. As you can see, it came to 4.8% last week, down a little bit. So that's definitely helped the market for sure. Wednesday rally, definitely a relief. Most of the major market indices enjoyed their best day since after Trump's election back in November. So that was nice. We can take a look here at the NASDAQ, as you can see, looking much better than it did at this time last week. And we'll move on to the S&P 600 Small Cap Index here. Kind of interesting. So I did some comparisons this morning between the large cap S&P 500 and the small cap S&P 600 by sector, just to see how the returns stacked up since last Friday through Thursday's close. And pretty compelling. So small caps leading the charge, up 3.8% versus 1.9% for large caps. Again, this was through yesterday's close, so it doesn't include what's happening here today when large caps are leading a little bit. Again, going a little bit deeper into small caps, we saw pretty dramatic outperformance in small cap tech and small cap consumer staples. A little bit of leadership as well in financials, but not nearly as much as those other two sectors. So definitely nice to see. It's not as though we are, in super bullish territory as far as the chart is concerned with small caps, but definitely looking better here, up around their 25-day moving average line, balancing pretty nicely off their 200-day moving average line. Moving on. So again, talked about treasuries, bit of a reprieve this week, and that's helped risk assets a bit. Early season reports from Q4 earnings season have also been well. It's mostly been financials. The earnings for the S&P 500 are expected to increase 11.7% in Q4. That would represent the strongest growth in 3 years, so something to look forward to. Again, I went back to small cap versus large cap comparisons, looking out at earnings for 2025 to see how expectations stacked up. As of this morning, analysts are looking for 14.6% EPS growth for large caps and 16.6% EPS growth for small caps. So again, kind of an undercurrent here that I'm trying to get across. Should be a pretty decent year for small caps. They definitely have some catch up to do. As far as other things going on, of course, the Trump 2.0 optimism sort of ebbed and flowed. It was pretty strong soon after he was elected, and then it started to fade in mid-December. But it's come back into focus this week. We should get a little more clarity on his executive orders when those start rolling out on Monday, when it's inauguration day, as well as, of course, MLK Day. It's the first time since the late 90s that those two events have happened on the same day, so that's kind of interesting. Bloomberg is reporting that Trump will issue executive order elevating crypto as a national imperative, so we have a little bit of an insight on that. We'll have to see what happens with other things, but certainly something to look forward to. As far as the Fed goes, nothing like super dramatic happened this week with regard to Fed officials and their tone. Although I think we could say that it tilted a little bit more to the dovish side of things. Again, that helped the market. And again, it was a result, I think, of what Fed officials said in concert with the PPI and the CPI inflation data coming in better than feared. As of right now, there is a 70% chance of a rate cut in June. It's the first month between now and June where the odds of a cut are greater than 50%. So again, that's kind of helping the market. And lastly, I think on the geopolitical front, this news that the Israeli government is expected to agree to a ceasefire deal later today with Hamas is helping as well. So the bottom line here is it's not the same bull market where everything is going crazy and like a lot of the junk and really speculative stuff is going crazy to the upside. We enjoyed that in November and early December. Bit of a pullback, but now a little bit of a relief rally. with rate cut reprieve and some more enthusiasm about Trump 2.0 starting next week. Let's move on to individual stocks. I think, with earnings season coming up, with Trump stepping into office next week, and then we have an FOMC meeting, the Fed coming up on January 29. My intent here is to kind of spread things around, take a little bit of a scattergun approach, because that's what I'm doing in my own research. I don't think that it's like any one sector I'm expecting to do super well as compared to another. So again, kind of spreading things around here. So if it seems like I have some kind of random sector allocations in today's video, it's just because I'm looking at stuff that I think is compelling. So first up here is Stifel Financial, ticker symbol is SF. Threw this one in because I've been considering it for Cabot early opportunities for a while. We haven't pulled the trigger on it, but the stock looks nice, and we had pretty decent earnings reports and reactions this week from a lot of the big financials, Wells Fargo, JP Morgan, etc. So if you want to get in on something in the financial area that might mirror those stocks moves, Stifel Financial could be one. It's going to report next week on January 22nd. A name that we've owned before that looking at again here is Shark Ninja. Ticker symbol is SN. Of course, there was this pullback here after the earnings report in last October, but the stock bounced back pretty well. I did some work on this over the past week. I think that management is saying that they should have 90% of their supply chain outside of China, I think by the middle of this year. Don't quote me on that, but if memory serves, that's where we're at with that. And they have a new FDA-approved facial mask product that just launched in January, which could be pretty significant. Kind of an interesting company if you're into small appliances. We bought one of their air fryer toasters, and it's worked like a charm. All right, that's Shark Ninja. Next up here is Reddit. Probably everybody knows this company by now. RDDT is the ticker symbol, market cap of $31 billion. Obviously, it's been a super hot stock since the IPO. And I think that's one of the reasons why I'm interested in it, because it has done so well based on almost like this super normal growth rate that they're experiencing. And given what we've seen in other social media stocks, of course, the growth can be much, much faster than expected when things go well. It can go the other way, of course, also. But I think expectations are high for Reddit, so I wanted to throw it in here just as one of these, like, sometimes there are these outlier stocks that do much better than expected for much longer than expected, and I think Reddit does have that potential. Obviously, there's quite a bit of risk in the name given how well the stock has done, and some analysts backing away from it because of that reason. But we have earnings coming up in a number of weeks on February 12th. All right, that's Reddit. We'll move on to Amerisports. Ticker symbol here is AS, market cap of $16.5 billion. And this is the company that owns Arc'teryx Outdoor Gear. It's an outdoor gear company. Salomon, Wilson, so it's a portfolio approach to outdoor gear. Interestingly, it used to be a tobacco company, started in Finland a number of years ago, but that transformation into an outdoor gear company, totally out of tobacco, happened at the beginning of the 2000s. And pretty decent numbers. They're growing very quickly, especially in China with the Arc'teryx and Salomon brands, Salomon footwear. Management seems to think there's a decent amount of potential there. Look for earnings. It's going to be out a ways from now, so you have some time here. Earnings won't be out until the end of February. But there was this brilliant reaction in the stock on November 19th after the last earnings report. All right, we'll get back into a software company here. Ticker symbol is OS. The company is OneStream. Market cap is just under $7 billion. They're kind of working on putting out a platform approach for CFOs to try to get the financial aspects of company management into the cloud. And it's been an area where there's been some resistance because, of course, company financials are very sensitive data. But OneStream seems to be making progress. Decent IPO, and it's been kind of just like up and down, trendless since then. IPO lockup expiration was back in here, and a bit of softness heading into the end of the year and the beginning of the year. But a little bit of support from analysts at Morgan Stanley lately have helped the stock. So I think it's one that could do well this year. And we have earnings coming up on February 11th. Another recovery play here is RIVN, ticker symbol RIVN. Of course, everybody knows this one. It was in the news this week because the U.S. Department of Energy finally finalized a loan to give RIVN up to $6.8 billion for construction of their manufacturing facility in Georgia. So if you want a contrarian play, EV manufacturer, I think RIVN is the best of the bunch as far as, outside of Tesla for exposure in the U.S. market. That is what the chart looks like. Blast from the past name here is LMAT Vascular, ticker symbol LMAT. Kind of an interesting history. If you take the time to read about the company, go back and read about the founders. Sort of a family-led operation. But if you look at medtech in general, I look at the IHI ETF for that. It's been pretty resilient, and we have here a bit of a drawdown in Lemaitre, LMAT. I'll just go with LMAT since I'm not very good at pronouncing the name. A bit of a drawdown, and then as expected for a strong stock, it found support where it did previously, and it's looking okay now, back to its 50-day moving average line. All right, we'll move on to Q2 Holdings, QTWO. It is a software company helping banks to kind of digitize their operations. And there was a drawdown here on the 10th for really no reason that I could find. And we've seen a bit of strength come back into the name over the last 5 or 6 sessions. And that's just what caught my attention. That's why I'm throwing it on here, because that drawdown kind of reversed these gains that came after the earnings report back on November 6th. And we, of course, have seen financial stocks do okay lately, and Q2 Holdings is a direct play on financials because a lot of small banks, credit unions, etc., will buy their software to help kind of digitize their operations and their communications with account holders, as well as help to market new loans, all kinds of things. So again, kind of a digitization play for small banks. That's Q2 Holdings, maybe a little bit of a recovery here. Kind of a standard small cap name, and I say that because when I look at small cap index constitutions, it always seems like there's just a lot of, not super exciting names in there, but a number of pretty solid names that should just do well if the economy does well. And I think that Rev Group kind of loosely falls into that category. They're a manufacturer of specialty vehicles, so things like fire trucks, ladder trucks, some really big RVs, ambulances, that kind of thing. As you can see, the chart kind of tells the story. It's like a higher highs and higher lows type chart. Obviously, there's some aberrations to that at times, but right now we're just coming off of a low. Stock again bounced off of its moving average line. That red line there is the 50-day moving average line, and so I think you could see another little run here and then a pullback if this chart pattern holds. So it seems to me to be one of these names that if you kind of want just like a solid small cap economic play on the US, Rev Group could be one. Lastly, we're going to go overseas to Make My Trip. Ticker symbol here is MMYT, market cap of about 12 billion. This is a company that's based in India that provides a variety of online travel services for both just consumers, business travelers, etc. And again, it's one of these stock charts that has a long history of higher highs and higher lows. So when I see a pullback like this, I get intrigued because there's no real news that drove the pullback, maybe a little bit thinly traded. And we have earnings coming up next week. Now that I have seen a few reports that competition might be on the rise for Make My Trip. So that is something that's kind of stopping me from getting into this name right now. But again, we have earnings coming out next week on the 23rd. So there'll be new information. And if you wanted to speculate on something, MMYT might be one for you. All right, that's it for this week. Again, market is closed on Monday for MLK Day. That's also Inauguration Day. And we have the FOMC coming up on the 29th with their next rate decisions, likely going to be a hold. So it should be interesting stuff for the next couple of weeks. Hope you have a nice long weekend, and we will be back in touch soon. Take care.